And look who's here, actually sitting next to me in the studio.
Whoa.
The man himself. His name is Dennis Gartman. He's not coming too close to me because I'm sick, but he's the editor and publisher of the Gartman letter, which is a very important letter.
You guys will apparently let anybody on this show.
I tell you, here we go. I'm back after a week off, and we got you on the show.
You got me. What a terrible homecoming to have to deal with me.
All right, enough
apologize.
Enough of the badinage, Dennis. Let's get on with this. I say the market has that feel to it. It just wants to go up, and you say?
I had been wrong for the last 2.5 weeks. No ifs, ands, or buts about it. I trade only for my own account, and I had been slightly net short. Not dramatically so, but slightly net short. Friday's action globally caused me to say, you know what, I'm wrong. And I've gone to the sidelines. I'm actually in my own account slightly, and I mean very slightly net long. Markets want to go higher. I just have to face that fact. As old Turkey in reminiscences of a stock operator said, after all, it is a bull market.
This is incredible.
Yeah, well, it is incredible.
A man who comes on the show, sits next to me and says, I was wrong.
I was wrong.
For 2.5 weeks, I've been wrong.
Terribly wrong.
Well,
the important thing in the world of trading is, one, to admit that you're wrong when you're wrong, and two, not to do more of that which has been wrong.
So we are not. I'm not going to say we're off to the races, but we're going up again. Are we going to challenge those old highs back in January?
Well, it has the look to it, doesn't it?
It sure does.
Every time you stand on its face, every time you stand in the way of it, it takes you out and makes you look foolish. The only thing that bothers me about the market is that the rallies occur on lesser volume, the breaks occur on larger volume. That's not how good bull markets should act, and that is bothersome to me most of the time. But for right now, I stood in the way of it for 2.5 weeks, and I said, you know what? That's enough. I had the bond market right, I had the dollar right, I had gold right, I had the foreign exchange markets correct. I even had crude oil correct, but I embarrassed myself in the stock market.
What a guy.
Yeah, it's interesting.
Come back any time you like. Right. Now,
one might as well admit when one was wrong, you know.
One might as well.
You know?
I've done it so often myself, but never admitted it, of course. Amazon, on the screen right now. What do you make of this company? What do you make of this stock?
I have not owned it. I have decried it for years. I won't own it here. Other people have made millions of dollars upon and it has been an extraordinary company. It has revitalized the retail business. It's changed retail around the world completely. But it's too high for me to buy it. God bless him. It is a brilliant, brilliant idea, and he's probably going to come up with more brilliant ideas going forward. It's amazing that here's the wealthiest man in the world. He's going to get wealthier.
But you won't touch it.
I won't touch it.
You just think it's just too expensive.
Plus, it's high tech. I'm an old guy. I like things. I have this wonderful commentary that I think makes sense for fellas my age. I want to own the things that if I drop them on my foot will hurt. Okay, I want to own steel. I want to own railroads. I want to own ships. I want to own copper. I want to own the things that I can count. If I drop them on my foot, they'll hurt. Software, when you drop it on your foot, doesn't hurt. I don't understand it.
I'm older than you.
No, you're not.
Well, we're not going to put it to the test. I'm a Microsoft guy. I've owned Microsoft for 20 years. I've just run the thing up, and I'm still in it.
Yeah, well, good for you.
How many times can you admit to being totally wrong on one program? That's a good question.
We could ask me another question, or we can try for another shot.
All right, interest rates. We've got the yield on the 10-year Treasury. Well, they put Microsoft up on the screen right there. That's for my benefit.
That's your benefit.
Don't worry about it.
Good for you.
Interest rates have calmed down.
Yeah.
We've got 284 10-year Treasury yield, 284 as of right now.
Yeah, it was 296 at one time last week.
That's right. That's good for stocks, isn't it?
That's very good for stocks. But the problem shall be, I think a year from now we're going to be looking not at a 284, maybe not even at a 384. I wouldn't be surprised if we're above 4% a year and a half from now. Rates want to go higher, need to go higher, and probably shall go higher. The bear market in bonds began in August, September of 2016. It's been a bear market now for over a year and a half. And I think the 35-year bull market in the bond market, which did a great job for my wife and I, because all we did in our retirement account was buy strip coupons 15 and 20 years ago. It was the great trade of the last 30 years. But I think that has ended, and I think we're now in a bear market for bonds. I think interest rates are going to go higher, and the Fed's going to continue to tighten. But that's indicative of demand. That's indicative of demand for plant equipment and labor, and why should we be surprised by that?
It's a good sign in many ways, isn't it?
It's not a bad sign. The problem shall be if the Federal Reserve Bank makes the mistake and takes the yield curve to an inversion, then you've got a real problem. I hope In the past, they have done that too many times. I hope that they are wise enough this time not to take the yield curve to an inverted position.
All right, Dennis, 3 times he admits he's wrong in a 3-minute interview. I think that's a record for this entire
There's got to be a new record. If it's
You're
not,
all right, Gartman.
Yeah,
Look at
well.
what they say. Thank you, Dennis.
Thanks for having me on. It's been my honor.